Welcome back, everyone, to the Schaefer Stock Market Podcast. I am Josh Selwhite, an editor at Schaefer's Investment Research, and man, what a busy week on Wall Street. There was a lot to get through. We had first quarter earnings season coming in with some of the biggest names on Wall Street reporting, and mostly a pretty upbeat earnings season so far, helping drive stocks back to record highs. And that's what I wanted to discuss today is some of the biggest earnings news, and also talk about some of the IPO buzz that's been going around Wall Street. Of course, we had Lyft about a month ago coming out, a big IPO, and now there's talk about Uber. We're getting more details about that, so we'll just do a roundup of some of that news as well. Let's get right into it. I don't even know where to start today. For no reason whatsoever, let's start with social media stocks. We had Facebook, Twitter, and Snap all reporting this week. Facebook delivered a strong quarter. Everything looks to be getting back to normal there at Facebook, whereas they are just printing a lot of money and their business is going strong despite all of the data issues we saw in recent years. And speaking of that, the company did say they're setting aside $3 billion to settle issues with regulators over their data sharing, whatever, misuse, if you will. And they even said that it could be up to a $5 billion fine. So some major money there, but still Facebook shares jumped after their earnings release. And I wanted to call out this analyst note from UBS, which set a 240 price target for Facebook stock, which was last seen trading around the $190 range or so. And the analyst at UBS pointed toward Instagram for Facebook's future growth. Instagram has been getting a lot of attention from Facebook analysts recently, with many pointing that to Facebook's main driver of growth going forward. That, as well as the stories feature on Facebook, which was a highlight of the company's earnings release. So UBS is pointing to $240 range as a breakout target for Facebook stock. What was interesting about this note, and I saw another analyst note like this recently on Facebook, and it goes along with something I talked about recently on the podcast, which UBS says here that it mentions regulatory headwinds and other privacy issues that are still going to affect the platform. It says that the market now better understands many of these risks. And in recent weeks, I saw another analyst note that said that Wall Street has become essentially numb, or they're not worried about these privacy issues anymore with Facebook. They've gotten used to it. And that's what I said a couple weeks ago, maybe last week on the podcast, that Wall Street is just has become used to these negative stories about Facebook, and you have to kind of expect these things to be coming out on Facebook still. But Wall Street says, hey, they're still making a ton of money and people are still using the social media site. So for right now, Facebook continues to push higher, and it's trading back near striking distance of a record high after another strong quarter. Facebook rival Twitter also saw its stock gap higher after earnings, a huge move out of Twitter, and it is what JP Morgan called a clean quarter, where just strong numbers all around out of Twitter. That platform seems to be stabilizing as it puts more efforts into providing a safer and more balanced platform, and that is easier to use for users. And speaking of which, President Donald Trump was speaking out against Twitter this past week, and on that same day he tweeted out how unfair Twitter and other social media companies are. He says that they are silencing Republican voices. CEO Jack Dorsey actually met with Donald Trump in the Oval Office to discuss certain issues, so that is something to watch going forward as well with Twitter. Strong quarter, and I mentioned JP Morgan. Analysts there believe that Twitter is becoming more relevant for advertisers. So that was just part of a mostly bullish response from the analyst community on Twitter's earnings release. Several price targets in the high $30 range. JP Morgan's was actually up at $46, which Twitter right now is trading just below $40 or so. It actually showed some technical resistance there right at the $40 area, which will be something to watch on Twitter stock. And I should mention too that there was interesting call buying on Twitter before earnings, specifically traders targeting calls in the weekly April 26 series, which expires Today, I'm recording this on Friday, April 26th, and obviously that's just a couple days after Twitter reported earnings. So these traders were likely targeting the company's earnings release, betting on a strong report, which is what they got. So these calls moved into the money, meaning that people probably made a decent amount of money here on these Twitter call options thanks to the company's strong quarter. Snapchat parent Snap also released quarterly earnings, and the stock initially jumped after the report, after the company unveiled its first increase in users in 3 quarters, and it also beat on revenue for the quarter, topped expectations, but the shares eventually moved lower. And they've held those losses after the report. Even with this pullback after earnings, Snap stock has more than doubled on a year-to-date basis. It was coming off those late 2018 lows, so it's coming off a low basis point there, but it has more than doubled in value this year and is right now finding support near the 50-day moving average. So we'll see if it can hold this technical momentum going forward. And I will say, I was just at a concert and it was interesting looking around and how many people were using Snapchat. So it doesn't appear to be an issue of user utilization or the number of people using this. It seems like Snapchat, sort of like Facebook in its early days, needs to just figure out a better way to monetize its platform and really get its financials in order. Again, I see plenty of people using Snapchat all the time. I know a lot of people close to me love using Snapchat. It's popular with the younger generation too. Even younger kids think it's really funny. All the filters and stuff you can use on that. So if they can figure out the proper way to monetize all this and not get consumed by the Facebook competition and competition from other tech companies, we could see Snap finally really break out. Of course, it traded well above these current levels shortly after its IPO. So we'll see if in the next year or so the shares can break out, maybe back to the $20 level or so. Speaking of technology, Microsoft reported a strong quarter, and it's the same story every time Microsoft reports earnings in recent years. They are being powered by their cloud business, Azure, and the company specifically said that it expects the growth in its cloud business to continue. Of course, Microsoft, thanks to this strong quarter, topped the $1 trillion market cap and extends its strong start to the year. It traded at record highs above $131 per share. A bunch of positive analyst attention. So Microsoft, we were talking at Schaefer's about Microsoft was sort of under the radar ahead of earnings compared to the attention being seen from these other tech giants. So it was interesting. Even the volatility expectations on Microsoft, we noted, were somewhat low going into earnings, and options traders really took advantage of that. There was a lot of call activity. In fact, a certain call put volume ratios of the major options exchanges hit annual highs ahead of Microsoft earnings. So apparently many speculators were expecting a strong performance out of Microsoft, and they got just that. Another stock that got rave reviews this week after earnings was PayPal. PayPal is the owner of Venmo, which allows people to transfer cash easily. This was the first time PayPal ever revealed details about how many users Venmo has. Venmo, it said, had more than 40 million users, and it apparently has some strong momentum here. Analysts noted that if PayPal can continue to monetize Venmo properly, it could lead to a lot of upside. In fact, Cantor Fitzgerald issued a note titled "Can't Stop Venmo." That was the main reason it raised its expectations on PayPal stock, expecting more growth out of that business going forward. Most of Wall Street is already quite bullish on PayPal, which just this week jumped to record highs, trading around $111 per share. Staying in tech, but going on the negative side of things, Intel is getting crushed as I speak. The company issued a very downbeat forecast. It lowered its revenue outlook for the 2019 fiscal year, and CEO Bob Swan pointed to China, citing headwinds there, specifically more cautious IT spending in China. So that comes as the U.S. and China try to wrap up trade talks, obviously. And the company also discussed its exit from the 5G smartphone market, saying that there was no clear path to profitability, and admitting that losing Apple was the main reason that the company had to exit that market. And if that wasn't bad enough, the company also mentioned a challenging NAND pricing environment. So really a lot of red flags popping up here around this Intel report. Intel had been strong ahead of this, but right now trading down 8%, and it's really weighing on the broader semiconductor space. Many chip stocks are getting hit because of this. This is usually what happens. Semiconductor sector is cyclical. People are always waiting, trying to get ahead for these sharp turndowns in this sector, in these businesses. So we see this all the time where a company issues a weak forecast, and that just crushes all the stocks in that semiconductor sector, and that's what's happening today. I noted earlier that NVIDIA in particular is seeing heavy losses, so we'll try to see if this is a buying opportunity, if bulls scoop in here, or if this is just a sign of things to come from the chip sector, which had been trying to move back higher from its early 2019 lows. But this Intel report is really laying the hammer down today. And I just want to mention quickly another Dow component, 3M, that is the maker of Post-its and Scotch tape, among a variety of other products. They issued a downbeat forecast as well for 2019, and they're cutting 2,000 jobs worldwide. That stock got crushed, traded down more than 10% after that report, and really weighed on the Dow as well. So that'll be another name to watch and see if they can overcome these losses. Speaking of losses, Tesla fell to fresh lows this week. I try to avoid Tesla as much as possible because it gets so much publicity, but I need to mention this low. It reported a few things that Wall Street didn't like. The amount of vehicles it delivered was disappointed. It posted a much bigger than expected loss. CEO Elon Musk said that they're probably going to have to raise capital, and this just comes a few months after he said no, or maybe it was a year ago. I can't keep track of everything happening at Tesla, but they said they're not going to need to raise capital. Now they are going to raise capital, apparently. The losses are not stopping on Tesla. It is down more than 5% again today, trading around $234 per share, so that stock has been getting hammered. A stock that definitely has not been getting hammered is Disney. It continues to push higher. After the streaming tailwinds that we saw, after the details of its new streaming service went public, now we have the company's new Avengers game, Avengers Endgame, all the publicity around that. Everyone loves that movie, it seems. A bunch of spoilers leaking on Twitter. It's been fun to follow that as someone who's not a huge fan but likes the movies. They're good. They're going to apparently make a lot of money for Disney, and investors believe in it because they are driving the stock to fresh record highs. It's been a huge few weeks for Disney stock, which is trading around $140 per share. And this comes as CNBC also reported that Comcast may sell its stake in Hulu to Disney as well. So Disney could be beefing up that content even more. And before I go, I wanted to give a quick update on the IPO scene because there's been so much happening in 2019, a lot of huge IPOs. We just had Pinterest go public, ticker PINS. That stock hasn't even had a losing session yet. It's trading around $30 per share, doing quite well. And of course, this comes as we just got details for Uber's upcoming IPO. They're expected to IPO in early May. This comes after ride-hailing rival Lyft went public. Lyft has not been performing well. That stock continues to struggle, trading near its all-time lows. And it even fell today after the Uber IPO details came public. Uber is looking to be valued north of $80 billion, and the shares are probably going to be priced between $44 and $50 per share. And it was also noted that PayPal is buying $500 million worth of Uber stock when it IPOs. And Uber said that it and PayPal may work together on other things in the future, including a digital wallet. So that'll be interesting to watch as well. As I said, next week's show is going to be another huge rundown of all the earnings action. We got Apple coming up and Google, a bunch of other names as well. I'm going to do everything I can to provide as much information in a condensed podcast as always. Hopefully I did a good enough job for you this week. If you could subscribe or comment something nice wherever you are listening, or share this podcast wherever you are. Head on over to schaefersresearch.com to see everything we're writing about every day. Check out our free market newsletters where we update you on some of the most unusual options trading activity, as well as the stocks making the biggest moves at all times of the day. But this was Josh Selway talking to you guys again. Thank you so much for listening. I really appreciate it. I will be back next week with much more information. Talk to you soon.